A very good afternoon to everybody. So here we are again in the today's briefing session for the day Thursday and 26th of March. So let's start and we'll first discuss the overnight developments because a lot of things have happened overnight which have impacted the market. So we discuss those news, then we go into the technical charts, and in the last we'll see the macroeconomic data which are pending to be released and how they are going to impact the market. So without wasting time, let's see. So the first news is coming from the European Central Bank. We have lot of speeches yesterday in the late night, especially the ECB president, and they are also very much confused, and they have shown lot of confusions related to that what kind of steps they are going to take in the futures, and they are watching this Iran conflict and all, right? And one big news is also coming from the Iran, which we are going to discuss, right? So over here, no rate cuts, inflation risk is there, euro is going to move sideways after giving the movement, oil is rising, and GBP is also getting supported because we have a lot of other news. At the time of making this report, these are the current prices, right? For USD index, for crude, for US futures, for GBP USD, for UAUSD, and for gold. Moving on to the Bank of England. So again, we have the Bank of England rate cut update, which is coming from the Nomura Securities, which is one of the very renowned research group. So Nomura just deleted every rate cut they had forecasted. So I'm just reading the headline. I'll give you the crux. So I'm just give you the crux or the gist that what exactly this news is telling us and what we need to do as a trader. Forecast for the Bank of England, all of them, the Iran war changed the math completely. So Bank of England revised inflation path. Right now it is 3% in the March 2026. It might people are expecting it to be around at 3.5%, right? If I talk about the quarter two, so these are the projections, right? Revised inflation path which the Nomura have done, and why they have done, because something big is happening right now. What to do for the GBP USD? Stay long. For UK gilts, those who trade in the bond market. So for the England bond market, you should avoid that. If you are a real estate investor, stay away because there will be turbulence. And if I talk about the oil prices, so I've used the pump prices because right now this is the headlines of all the newspapers. Petrol pumps are seeing lot of crowd for past 2 3 days, right? So we need to watch. Why? Because if oil prices rises now, high probability that inflation is going to rise in 4 to 6 weeks. And then I'll give you the chronology that what is the exact chronology which market is going to follow if there is Iran war escalation, right, happens. So energy is like the root of a tree. Once it moves, everything above it moves too. Transport, food, heating, manufacturing, the whole tree shakes. Now, another news which is coming related to the equities update from the one of the again big research house. So yesterday the stock 600 is at plus 1.4%, S&P 500 in positive, right? Materials. So the raw materials are up by 1 to 2%, and geopolitical reversal trade which we have seen, right? And this morning what happens? Asian markets have given the negative returns, right? So they have given the negative movements. US futures, if I talk about, they are also in negative. European futures are also in negative. Oil all of a sudden getting spike for the upside. Optimism related to the peace talks or the there will be a mediation between the US and Iran is fading right now, and the chances of escalation is going to rise. The hidden story, especially if you're trading into the equity. So these are the companies which are listed with the BMN Capital. So we have the Broadcom lead time 6 weeks to 6 months, right? Price impact, components and chips getting more expensive because of this issue which is right now going on. And this is the news. So I have shared detailed report on every single topic which I've discussed in this slides into the BMC premium group. So go through that group and try to read all those things I've given, even the trade setups, what are the important levels and what are the key developments which are happening in company, gold, oil, everything. Okay. Intel and AMD, if I talk about one of the market leaders, right? So delivery 1 to 2 weeks to 12 weeks, right? So quarter 1 earning risk is there because we are in the last quarter, right? And there will be lot of surprises are going on. Just for your knowledge sake, I've given the analogy, a real life analogy, that how this oil prices are going to impact uh, your pocket. Okay. Now moving on to the next, which is the ECB update from the Rabobank, right? So it's Robobank. It's my mistake. Okay. And this is also one of the big house which used to cover all the important developments related to the interest rates, right? So over here also they have given the most important scenarios which have been conveyed by the Christian Lagarde, who is the president, right? So they have told that large plus persistent overshoot. So ECB hikes are decisively. They are going to watch the upcoming datas and then they'll going to decide, and the probability is very high that they are not going to cut the interest rates, right? And which is an indication that inflation is going to rise, and as a result it will have a negative impact on the precious metals. Then we have second scenario, which is the measured adjustment, large but short-lived spike, right? We can see in the euro. Then we have the content pass through. ECB stays present and and do nothing, right? So whatever is the current interest rate, they will hold this rate, right? And for this, they need oil prices to be stabilized. Now the next, that what happenings in the forex market today. So Euro USD is in the range bound, but all of on a shorter period that have given the spike for the upside. At the time of making this report, prices are trading at 1.1550, right? We are going to discuss everything on the charts also. Just I want to give you the headlines that whatever price movement which you have seen, what are the reason behind that, right? And you have to keep this into mind. For the USD JPY, we need to watch the 160 level, which is very important because once the USD JPY moves above the 160 levels, central banks are going to intervene into the market. And second thing, the 2 year bonds for the Japanese government bonds have seen a spike into their interest rates. So bond yields are rising, and this happens very rarely. If people are investing into the Japanese government bonds, that means there is lot of risk, right? And we can't see that, but the smart money have already identified that, and that is the reason they have diversified their investment into the safer haven assets, especially the JPY. For GBP USD, risk of sells everything, including good currencies. Bank of England story intact. This weekend is temporary. Wait for 1.3300 support bounce. For the odd USD, because gold is getting weaker, and same is the case with Australian dollars also. Second thing, because of the oil price are rising, which is impacting the demand for dollars, right? US dollars, and US dollar is also getting stronger, and as a result, gold have given us a very surprising correction into the prices. This is the most important part which I want to discuss with you. So this will be the domino effect we call, right? So if we hit one block, all the blocks will get disturbed, right? So what happens? Iran rejects the peace deal, and that is the most important development of the overnight. Because of this, Hormuz threat, oil supply at risk, and they have mentioned few conditions that they want to control Strait of Hormuz, and they want to place a toll booth over there, right? Those who want to pass, they have to pay a fees. Because of this, oil prices jumped to 1.50 mark, right? And they might go more aggressively up, right? And because of this, if oil prices rises, after few days, the cost of this oil prices will be transferred to our pocket, right? Once this happens, then the inflation on a global level is going to rise. Once this happens, then what? is the next. Central banks cannot cut the rates. If they cannot cut the rates, bond yields are very good, right? That means these are the fixed income assets which are giving the risk-free returns, right, as compared to the riskier assets. So people tend to invest into the safe haven financial products like the fixed interest rates, T-bills, short bonds, right? They sell their gold positions and especially the equities and indices. So it is a signal of a bloodbath for stocks and indices. Economic growth expectations will fall, so GDP will go down, and as a result, dollar as a safe haven currency, right, will boost, right? So this sentiment will boost into the market and it will put downward pressure on everything else. Now, for euro, GBP, odd, and equities, all these currencies are going to fall in comparison to dollar. Okay. So one political decision in Tehran, seven market reactions across three continents, and this is why geopolitics is not optional for a trader, right? It is a map that makes the chart. Now, here are the five important rules which you have to keep into mind if you're trading today. Oil is your compass for today and even for the upcoming days. What happens to oil? According to that, all the other asset classes are going to react. Second, wait for the Fed speakers before if you want to increase your lot sizes or big position sizes, right? So you need to identify that whether any kind of hint is coming from there that they are going to cut the interest rate or increase the interest rates, because they have mentioned that they are going to cut. There will be only a one cut in the year 2026, but the scenario is changing, so the cut would be more, right? Or might be possibility that there will be no cut, and instead we will have a hike that will be a surprise for the market and gold will touch the bottom. So do not fight the risk of tone, right? Then gold dipping is not a buy signal yet because of this developments. The best trade today might be no trade. Okay, if you're holding for a longer period of time, although I'll give you the simple techniques that how to take intraday trades today and what kind of market structures we have been identified, right? So no rate cuts in Europe anytime soon. Both Bank of England and ECB are in hold or hike mode. The cut cycle is dead for now. Okay, so as a result, the current bond yields are quite impressive, but they are not that much strong as compared to the dollar. But as compared to other currency pairs like odd and all, euro or GBP odd are the good pairs to trade today. Oil is driving everything, right? So I don't have to discuss oil, inflation, rate decision, currency movement, safe haven demand for currencies, and gold bearish pressure. Germany is buying, France is struggling. Trade the divergence. So this is for those guys who trade into the indices. So we are going to discuss today the German index, which is the GE40 or DAX 40. April ECB meeting is the real decision point, which is going to happen soon, right? And before that, we have a lot of data, especially related to the service CPI data, right? So we need to see. And in the last, the geopolitical map. Now let's move on to the technical chart. Then we are going to discuss the macroeconomic data events for today. Okay. So let's start with oil first. So this is the oil chart on the H4 time frame, and intentionally I've used H4. Otherwise, I don't use H4. I use either H1 or 15 minutes. But over here you can see this blue channel, and this is the deviation channel. I've drawn this deviation channel to the latest candle, and this is the midline of the deviation channel, which has been crossed by the market. And you can see my trade that once I get this confirmation by making two candles right over here, I have taken a very aggressive trade with a very high risk to reward, which is being executed and currently running in profit. And I am hoping that prices will go up and test this. Channel resistance right over here. So I have marked this area as my target, right? Second thing which gives me more confidence is this short term bullish divergence, right? And same kind of divergence I can see over here, right? Although it's not that impressive, but the impressive part is that prices haven't taken the low of this candle, right? These are the two strong candles, and still the prices are trading within the range of this candle. And this happens because we have this Iran development coming overnight and impacted the sentiments of oil traders, right? And they are pushing the prices upwards. So I'm going with the flow of the geopolitics, and that is the reason I've taken this. Now, if oil is going up, high probability that dollar or the USD pairs are also rising, right? We can see the DXY chart also, and we can see the USD CHF and USD CAD charts also, right? But for USD CAD, because CAD is also correlated with oil. So if oil is rising, CAD is also gaining strength. So the probability USD CAD might give us a sideways movement. But USD CHF and USD JPY, these two are the pairs in which we can find good trades, right? So before moving to the pairs, first we'll discuss the gold, silver, and then the natural gas, and then we'll discuss the forex pairs. Now let's come to the gold. So this is gold in 15-minute time frames, right? This is the start of the day. And let me give you that every time at the 13th and 14th candle, right? This is the time when the London reference rate for gold has been set. Yesterday, we've been discussing with the clients, right, that this zone is the most important zone, right? And this is the 13th and 14th candle, right? Prices in whichever direction gives the break, the probability of prices to go down is high, or if prices gives us a break towards the upside is high. We are expecting that prices might give us a break in the upward direction, but this doesn't happen. And in the late night, when we have these speeches and all of sudden prices went down, then again went up. You can see the retest over here. Make this swing, right? Just to mark this swing, let me put a indicator, which is my favorite, that is fractal, right? Okay. Now you can see the fractals. So this is the swing point have been made by the market. Retest have been done. If I want to take the trade, although I missed this trade, so I can take this trade below the low of this candle by placing the sell stop order, right? And keeping my stop losses above this area, right? Now this has already been happened. Now what next? So let me come to the H1 time frame, and you can see these are the moving averages. This is 156, right? This is 72. So prices are trading within the range of 156 and 76, right? Whenever prices came into the area between these two moving averages, right? High probability that prices will move sideways. You can use 100 and 200 or 150. Whenever prices moves over the 50 and below the 100, probability of a sideways movement is quite high, which is a good sign because you can trade the breakout. Now let's focus on the H1 time frame, right? So over here I've taken the sell call in my account, right? So why I've taken this sell call? Not because of that, because I know the momentum has been done, and this is the box which I've marked in the 15-minute and the previous charts of the moving average. Prices have given the breakout. I missed that breakout, but I know that there is a very good imbalance in the prices, right? Prices again retested it. So anytime whenever I want to confirm my entry, if I am towards the sell side, I want next candle to be green. That is the retest candle. Once the retest is done, I wait for the prices to give me the reversal. That means give me the first red candle. And once this is done, because this is a fair value gap, this candle have mitigated that fair value gap. And I have seen that I have never seen such kind of pattern where a reversal starts with green candle. If this candle is red, instead of taking sell call, I will be playing on a pullback towards the upside. But this doesn't happen, and that is the reason I've taken the sell call, keeping my stop losses just above the high of this candle, this impulsive candle, because prices requires lot of strength to break this action, right? Second thing, this trend line have been broken, right? The only thing of worry is that over here I've marked this consolidation, which is a kind of ascending triangle formation. So prices have broken it. Now they have retested it. Now the probability of a upward correction is there, but because of the news and all the developments, the probability that prices might go down and take all these swings, right, which have been marked by the fractals, is quite high. And that is the reason I have taken a 1:3 restore reward of sell call in the gold, right? It's not a recommendation to anybody. I'm just telling you that what I have seen into the chat and why I have taken that decisions, right? So wait for that, or if prices takes a U-turn from here, right, and makes two consecutive green candles, in that case I need to get out of the sell position, and I have to change my biasness towards the upside. But the probability for that is very low. If I mark the Fibonacci retracement also by keeping this low and high, so already it have break the golden ratio also, and I use 75.5 level also. That level also have been broken. So sell side pressure is more. Then we have lot of macroeconomic and geopolitical developments which are pushing pressure on the gold prices. Now let's have a look on the silver. Whatever gold is telling us, same kind of thing has been conveyed by the silver prices also. So let's move to the silver chart. See over here, I have used the Fibonacci, right? Uh, they have taken the correction from the exact 61.8 level, which is also my Fibonacci expansion level, right? So I use this expansion over here. Let me mark it, right? So you can identify this is my Fibonacci expansion. And from here to here, just to identify that how much correction it can take, I've used the Fibonacci retracement, right? Now what happens? Prices have breaked it. Now here we have the overlap of Fibonacci expansion along with the Fibonacci retracement. So this area will act as a strong resistance area. Second thing, this is the previous fair value gap which have been tested once, right? Now again it has been tested, and the probability once any fair value gap, that means imbalance, is been tested, the probability of a breakout of that specific structure is very, very promising. So that is the reason I am more confident that we might have a sell call, okay, or a selling pressures. But if there is a reversal, then new market symmetry will come into the picture, and that will be like this, right? See over here. This is the shoulder, right, which has been forming, right? This is the neckline. Let me mark this neckline with red. This is the head which have been made by the market. Okay. This now this is a development of a new shoulder, right? So it is a inverse head and shoulder, right? And lot of eyes have already identified this, right? And high probability they might take buy calls, right? Although they are getting a very depth, but news are telling me a very different story. So I'm not towards the buy side, right? So I'll wait. I need this. If these two candles are red, right, and almost after 4 minutes, this H1 candles is going to get close, right? If then in without taking the low of this candle, if I find next two candles very strong and having momentum into it, then I'll change my biasness, and same kind of thing is happening into gold also. So for both the precious metals, my biasness is going to change towards the buy side only in that case. And for the next days, I know that this is the market structure which is being traded into the market, right? Because I am not the only one who have identified this inverse head and shoulder, right? If I make it on a H4 time frame, see how perfect it is. Whenever you find any kind of market structure formations like head and shoulder or inverse head and shoulder at the top or bottom, high probability that they are going to give you a very good result, right? So we need to wait. So that is the reason I've mentioned, either if you are a very good risk taker, then only take trades, or we have 2 days, right? Friday is a profit booking day. Today is Thursday. Then we have the future expiries also, right? In the CFT, CME market, which is the Chicago market, like Mercantile Exchange and all. So we should wait for the market to react. If they are trading according to the market structure which we have identified, so we are going to trade the same market symmetry which is being conveyed by the price charts, right? So we take that trades right? Otherwise, no trades. Oil we have discussed. Now let's have a quick look on the natural gas also, because this is also been impacting by the market. This is the previous day, right? This is a daily candle, right? And this is the structures which I have identified very important, right? Prices have given a very strong bullish engulfing pattern, and this engulfing pattern has been failed, right? They have taken the low, but the size of the candle is not that promising, and it is telling me that still sideways movement is very promising into the natural gas. So although we are not going to find any good trade, but yes, because they have given a breakout of this zone, so the probability of a test of this zone is very promising. So we can expect prices to move almost 40 pips, right, which is very less, and the lot size of natural gas is also big. But yes, we need to have a keen eye on natural gas prices, because if oil is really impacting the market symmetry for all asset classes, it is going to impact the natural gas for uh, uh, at the initial phase, right? So the first script which is going to react is the natural gas, then other scripts are going to react. Now let's come on to the GBP USD, which is our currency pair. We've been expecting the sideways movement, right? Consolidation. So we have seen over here, it's a 15-minute time frame. Now let's make it to H1 time frame. Now see, this is the structure which we have marked over here, right? Prices have been traded within this structure for a quite a long time, right? And whenever you have a extension of any kind of price pattern, the probability of a prices fall is quite high. Okay. And the news is also conveying us the same thing. But yes, because dollar is also getting stronger, because of no rate cut, pound is also getting strength. So the probability that it might continue within the same structure which I have marked with the arrow. Now, if I come to the Euro USD sideways movement, this is the trade which we had discussed in our previous sessions, right? I've been waiting for the target to hit, but almost I get very good points, but prices have reversed, right? And now the whole symmetry or whole scenario has been changed. And now we have this area as a strong resistance. This is the pivotal point which have been made by the market, which has been broken. So I wait for the prices to come down again. Now focus over here. We have a red candle, then a green, then again a red. And this red has been continued, right? So the probability that there might be a test, and then again there will be a fall into the prices, right? Once this is happening, that is the time we can take the sell call in the Euro USD for the target of this order block. Order block means from where you have identified the impulsive movement, the last selling candle of that impulsive movement, right? So the bulls have started pushing the prices from here, and this is the last candle, right, of the sellers, right? So this is the climax of the sellers, right? So prices might come at the same level, right? Before that, we have a strong imbalance into the prices, so no strong movement is expected. Swing are going to be make over here, right? So this kind of structures, lower low formations and lower high formations would be there. Now let's have a quick look on the USD CHF. So this is USD CHF. Right now it is consolidating, but you can see that continuously this is the trend line which is being respected, right, again and again. And probability because of the news, after testing this again there will be a continuation into the prices, because we haven't find a very good reversal into the prices. See this reversal, see this reversal, see this structure, right? Haven't find such kind of structures forming over here, right? They have tried it, they have just created a trap for the sellers, right? They have kept their stop losses, and again their liquidity has been hunted. Then again they have designed the same kind of trap, right? So I need a clear break right below the low of this, right, with a very good big candle giving me the close below the low, then only I think of taking the sell call. Otherwise I'll wait for the prices to take a dip below this low and I create my buy call in the USD CHF pairs, right? For the USD CAD, so this is into the H4 time frame, right? This is the channel which we have marked, and prices have came back again into the zone. And see over here this market structure. Again, this is the shoulder, this is the head, this is the shoulder, this is the neckline which have been broken. So probability of a retest is there, right? Again, so we've been waiting for the prices to come down, and if again from this trend line which I've drawn over here, they are getting a rebound, then I think of taking the buy call. Now comes to the USD JPY, right? We've been watching USD JPY for past almost 2 weeks, right? And it has been trading within the range. This is a daily time frame, right? And this is the symmetrical triangle which I marked over here, right? Now, because all the things are in sync with the USD JPY, and if there is a war escalation, soon there will be a spike, right? A breakout into the prices, right? And if I look into the chart, so the probability of the prices to give a breakout towards the upside is quite high, right? And if this happens, gold is going to go down and test more below support levels. Now let's move on to the next segment of the session, that is the indices, right? So first we'll discuss the US 30, then we'll discuss the D40, right? So Wall Street 30, tensions, Iran tensions, war, last uh, month of the financial year, that is the March, right? That is the quarter ending also. So we have marked this that if prices clear this area, then there is probability that prices might go up. This thing which we have discussed yesterday. So prices have break this trend line which I've drawn, and right now they are going downwards and without any single thought. Still there is room available if anybody wants to catch few points, right? So almost they are getting 150 points of fall into the prices of indices very safely, right? So we can trade our short side positions till this level, right? From this level, when the US session starts, we have data, then there might be a short term reversal toward the upside. So we have to watch that. So those who are active in the Euro time zone, so Euro session, they can take a short term sell call, right? Wait for the candle, this candle, right, to give you the close. Whatever pivot point have been made over here, below that pivot point, place your sell stop. That will be a very good strategy, keeping your stop loss about this swing, right, which is a kind of inducement, right? Because prices went down again, they have designed a green candle, right? When buyers came in, all of a sudden they have changed the market symmetry toward the downside still, and this low has been broken. So whenever any important liquidity area has been broken, prices tend to test it, right? So sellers have given the chance, they have break the level. Now buyers would be given the chance to prove themselves whether they are strong or not, right? If they are not strong, they are going to get fail, and all of a sudden, as soon as the weakness came into the charts, we can create our sell positions. Now let's have a look on the DEX. So same kind of market symmetry has been formed into the DEX into the H1 time frame. Now let's have a look on the daily time frame first, right? So see, this is a strong sideways movement, a strong green candle, and for the last 3 days, prices are trading within the range of this candle. That means they are telling us that we are in a mood to take this low, right? So yes, downside is there, right? But this should be happens today only, right? Because Friday is a very dangerous day if you're trading into the indices, right? And after seeing such a free fall, everybody's biasness is toward the sell side, and the Wall Street guys know this, right? So if you got stuck into the sell positions, there might be trap, right? And your stop losses will be hunted. So it's better you should book your profit and get out of the market. Don't hold your positions for the next day. Now into the H1 time frame, if we have a look, so it's very promising. Although the size of the candles is not that promising, we have a very strong bull standing over here, right? Which is safeguarding the SLs which are resting over here, right? So let this area be clear, right? Because the size of the candle is very small, and we haven't find any swing has been made over here. So the probability prices may give you a fake breakout of this trend line towards the upside When buyers came in, they will place their stop losses here or either here. That means more liquidity will come below this area, and then there will be a fall into the prices, right? Not because the chart is telling, because the geopolitical events are also telling us the same thing. If they really wants to push the prices upwards, they can push the prices here itself. But what happens over here, right? See, this high point is not been taken by so many candles till now. Okay, almost 2 days have been completed, and this is the third day. Okay, so somebody have bought lot of uh, positions over here, right? And they are right now in a phase of distribution. That means they are doing the profit booking, right? That is the reason market is moving sideways. And when market is moving sideways, that means the big players are active right now. Now let's come on to the last segment of the report, that is the Bitcoin. So see, Bitcoin is still moving sideways. We continuously discussing that this is the day which is very important. So this is Thursday, this is Wednesday, right? And this is Tuesday and this is Monday. So I want a breakout of the high of Monday. And for past 3 days, right? We have seen the price action within the range of the Monday's candle, right? So high probability because market is in a sideways phase, and see this trend line which I've drawn. Prices are trading at this trend line. So all of a sudden there might be probability of sudden spike towards upside also, right? And towards the downside also. The good thing is that we have Saturday and Sunday also. So if today's candle give you a red close, and the next day on Friday, if they break the low which have been made today, right, is broken, high probability that prices will go below the low of this candle, right? Alternative scenario, if prices on Friday changes its directions and clear this high, this pivotal high, right, then the probability that prices might go up and they will test the 80,000 and 78,000 zone. Okay, so keep this into your mind, right? Second thing, if we see over here, so over here we have marked this red dotted lines to just show you that there is a divergence being forming into the RSI 5, which have been failed right now, right? Prices try to go up and now they have failed. So lot of people have traded this divergence and their liquidity is resting over here. So if upside movement is there, suppose right now it is red candle, but all of a sudden when the data releases, especially the, and if there is an any news coming which is impacting the oil, that will impact the energy prices, and energy prices will impact the Bitcoin, and this candle turns green. In that case, today is the day to create your buy positions in the Bitcoin. Okay, so that's all for my side. I hope you understood that what are the important developments which are happening, right? I have made a detailed PDF report because we don't have that much time to discuss everything in detail. But in that report, in that PDF file, I have given each and every aspect, given you the real life analogy so that you can understand the concept and apply it. Whatever I have given, you can apply that thing into your real trading, right? That information will help you in taking the right trading decisions, right? Important price levels and what kind of scenarios we can expect in different scripts, right? And how to trade those, everything would be given. But for that, you need to message your relationship manager, or you need to visit our BMC premium group. Over there we have shared the articles and the news report and the link to important documents. So that's all for my side. I hope you have enjoyed today's sessions, and I have done my best to do the value addition into your knowledge. So this side, Anurag, wishing you a great trading day ahead. And thank you from my heart for attending the session and listening to me so patiently. And this is a recorded session. You'll get the recording of this sessions also. And this video has been uploaded on my YouTube channel with the name My Star Mentor. So you can visit over there, and whatever we have discussed, you can go through it or you can take reference from that. So thank you all. I request all of you to kindly leave the Zoom meet room.